Hello, welcome to Venture Capital. I hope you had an amazing Christmas and you're enjoying the rest of your holidays. Now, in today's show, we're going to be looking back on some of the financial winners and the losers of 2013. We'll be speaking to Saxo Bank's chief economist, Steen Jakobsen, on next year's outrageous predictions, the annual publication that always sparks debate. First, it's been another year of modest success for some and economic woes for others. But the general theme for the majority of the world's major economies has been the stalling of growth. It seems that the recovery road from the financial crisis is a long and winding one. The European debt crisis has managed to avoid collapse, but yet there's no resolution. There was the US shutdown over money squabbles, the Ukraine trade tug of war, and Russia failed to achieve its big growth ambitions. So we're going to check in with our correspondents in Washington, Berlin, Kiev, and central Moscow for more 2013 analysis. Let's first check in with Pirian Boring, who's in Washington for us. So Pirian, tell us, 2013, what's your take?
Bitcoin is definitely the financial winner in the United States. It started the year at about $13 and peaked at $1,200. Additionally, Congress held hearings on virtual currencies last month where federal regulatory officials recognized the benefits of Bitcoin, closing the year on a very positive note. Anyone invested in the virtual currency did very well in 2013. The biggest loser this year is the middle class. This year alone, through quantitative easing, the Federal Reserve spent about $1 trillion in bond purchases, which is devaluing the U.S. dollar. And of course, this also hinders the country's reputation on the world stage and helped lead to the talks of a possible debt default during the partial government shutdown. Anyone on a fixed income has been negatively affected by the Fed's inflationary policies.
Thank you, Pirian, there over in Washington for us. We're now going to cross over the pond and check in with Mr. Peter Oliver, our European correspondent. So tell us, how has 2013 treated Europe then, Peter?
Looking at the data for business at the end of 2013 in the Eurozone, and things can look quite rosy at first glance. Orders appear to be up across all of the nations in the monetary union. However, when you look at it on a nation-by-nation basis, you see that's not the case. There's clear winners and clear losers. When it comes to winners, look no further than right here in Germany. Both large and small-scale manufacturers have seen increases in the orders they're receiving, particularly when it comes to the automotive industry. That's come from Asian markets that they've been targeting particularly hard. When you look at the losers, though, just across the border into France, the Eurozone's second biggest economy, well, they've seen steady contraction of their business sector, something that's sure to be a worry heading into 2014. Add on to that, still serious economic problems in countries like Greece, Spain and Portugal. And the end-of-year report really reads, good work, Germany, but the rest of you need to do better.
Oh, New Year warning there from Mr. Peter Oliver reporting from Berlin just there. Let's now go next door on the map and join Alexei Yaroshevsky, who's been covering the events in Kiev, the trade war situation ever since they kicked off. Alexei, 2013 has seen Ukraine pushed into the global spotlight, but for all the wrong reasons. Could you summarize the country's situation this year for us?
Well, in November and early December, it seemed that Ukraine would be a big-time loser this year economically. The country's economy was in a pre-default state. Trade relations with Russia faltered, which seriously affected the economic situation in the country. Or add that to a huge external debt of more than $136 billion. It was cited as the main reason why Kiev did not sign the Euro Association deal, fearing that the country's economy might plunge into a further abyss. All that caused massive unrest, the blockade of governmental buildings. That's why the budget for 2014 could not have been passed for some time. But 2 weeks before New Year, President Yanukovych went to Moscow and signed several agreements. Moscow promised to invest $15 billion into Ukrainian bonds, and eventually the budget has been passed. And we can say that at the end of the year, Ukraine might eventually turn out to be winners economically, especially comparing to the situation in September and in the summer.
Alexei Yaroshevsky reporting in Kiev for us, wrapping up 2013 for Ukraine. We're going to now arrive back in Moscow, where Igor Pishkinov is, to tell us what Russia has achieved and what the country didn't manage to achieve in 2013. Igor, fire away.
Well, it's been a year of broken illusions for Russia. Started off with optimism, though, with the government talking about an annual growth rate of 5%. But then it was taken down to just 1.4% this year. So what went wrong? Well, simply Russia is no longer immune to the global slump, which means there's a weaker demand for Russian exports. But domestic demand has been weak as well, and investment recovery hasn't happened, while promises for an infrastructure overall remained just that. Promises. But it's not all that bad. On the positive side, Russia's campaign against corruption has made progress. In an effort to tackle offshore accounts, bureaucrats were banned from possessing bank accounts abroad. Also, the government is talking about introducing stricter penalties for firms avoiding domestic taxes, and 30 Russian banks were shut down since they couldn't meet the new quality standards. So in overall, growth has been the loser, but the winner has been Russia's ongoing campaign against corruption.
Igor Pishkinov there reporting from Moscow, as you can see just outside the Kremlin. And staying with Russia then, the biggest winner personified for 2013 was Mikhail Khodorkovsky, once Russia's richest man, who was pardoned by President Vladimir Putin. Now, the oil tycoon, the former Yukos oil company chief, has spent 10 years in prison for economic crimes, including oil embezzlement, but was freed on humanitarian reasons as his mother is ill. And this was Putin's final act in 2013 to improve the investment climate in Russia, with the theme of anti-corruption and the rule of law ongoing. Now, moving on, the Saxo Bank has released its annual outrageous predictions for the year ahead. And these are the ones that I think are most outrageous, because there were 10 in total, so I've picked 5 out. So, EU wealth tax heralds return of Soviet-style economy. That's the first one. So with growth still pretty flat, wealth taxes for people with savings over 100,000 euros will be enforced in a move towards equality for all. Then, anti-EU alliance will become the largest group in Parliament. Yes, so, well, you don't need me to tell you that this would mean political and economic turmoil and perhaps the end of the union. And next up is the tech's Fat Five wake up to a nasty hangover in 2014. So with the huge wealth of Amazon, Netflix, Twitter, Pandora Media and Yelp, could this be set to burst? Brent crude drops to $80 a barrel. That's if producers fail to respond. This would be a disaster for Russia. Now, all thanks to the non-conventional methods and increased Saudi Arabian output as well. And then the fifth one that I chose, and probably, in my opinion, is the most outrageous. I was most shocked by this one in particular. So Europe's powerhouse, Germany, in recession. What? Yeah, shocking stuff. Right, let's get straight to Saxo Bank's chief economist right now, Steen Jakobsen, to shed some light on these scenarios. Steen, I want to start and ask you about the EU wealth tax. What's that all about, and what's the likelihood of this happening?
I think it's very likely. It's already been tabled by the IMF as an indication of what is needed in Europe. What Europe needs, of course, as we also saw with the banking deal this week, is to secure a certain amount of funds that can be used to recapitalize the banking system and overall support the weaker nations. So, I mean, the European economy has moved pretty much to almost to a Soviet-style economy with planned economy, and I think this will be the final straw, confiscating wealth from Europeans.
Mm-hmm. So if you've got money, hide it. Moving on, anti-EU alliance will become the largest group in Parliament. Now, this is worrying. That could end the union completely.
Yes. So what you probably noticed is that in England, in the UK, the UKIP party, the UK Independent Party, is now bigger than the Tories exactly to this European parliamentary election. Similar in France, Marine Le Pen is having strong wind into her sails, and the far right in Holland, which also represents the anti-EU, is also doing extremely well in the polls. So by end of May, we could have a situation potentially where the big biggest or the second biggest fraction of the European Parliament would be the anti-EU vote, which runs counter to what the EU Commission and most of the politicians want, of course, because they want more Europe, not less. But it seems like the voters want exactly the opposite. They certainly want less Europe, not more.
Ooh. And we've got the Tech's Fat Five wake up to a nasty hangover in 2014 because they've had a great year.
Yeah, they had a phenomenal year, and what is interesting is that we're not actually saying that technology is expensive. What we are saying is that these names, which is household names, the names that people recognize, the ones that people use, are the ones that are at a bigger risk. The bigger risk comes from the fact that when they buy technology, they tend to buy what they do know, and that's what we're trying to point out. So take Amazon. The CEO Bezos may be the most brilliant businessman in the world, but that do not justify that you pay $300 for every $1 of profit the company generates. It's simply got too expensive, or in the language you just used, too fat.
Mm-hmm. And listen, this one's particularly worrying. The next one, the $80 a barrel for the crude oil, because obviously I'm talking to you from Moscow here, energy-dependent stocks. People are going to be sweating all over the place here. What's going to happen? That's quite worrying.
It is, but if you think about it, it's actually quite logical, because already right now in the WTI, the US-based production is extremely cheap and trading at a discount of $15 to $20 from the Brent oil. But if we look at the Brent oil itself, of course, the bigger risk, or the positive risk, if you think in geopolitical terms, is that Iran comes online in terms of production again. On top of that, you have Libya, you have a number of the other countries that over the past couple of years has seen a much smaller production relatively. If they do come online, and at the same time, as I do expect, a slightly weaker global growth, you have almost a perfect storm in terms of the price. And as you correctly say, there will be a challenge to not only Russia, but certainly to most of the Middle East.
Absolutely. Watching that one for sure. Now, this one, for me, was my personal most outrageous one. Germany in recession. What's that all about? Because they've done very well this year. It's the powerhouse of Europe. That's scary.
It is, but again, I don't think it's that far-fetched. Do not forget that the reason why Europe and certainly Germany did so well through this crisis is the simple fact that emerging Asia decided to ramp up their investments all the way up to a significant part of the GDP. So they over-invested. A lot of that investment they do, of course, is German cars, German production. And then at the same time at home, you now have minimum wage. You have the most expensive electricity in the world. You have 7 million working poor. So Germany looks better on the surface than it does underneath, and I think that is what is coming to coming into the full light in terms of 2014. Germany is already slowing down underneath, but right now they're reporting top line very well.
Steen Jakobsen there, joining us from Saxo Bank, talking to us about the outrageous predictions for 2014, which apparently aren't so outrageous after all. So there we go. Thank you for joining me. It is indeed the last show of 2013, so I will see you next year.